Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, December the 15th, the year's 2020. Let's talk trading. Winning ugly with Walmal. A couple of weeks ago, I had mentioned that I put on a trade and I won, but it was an ugly win, and I really shouldn't do that. And then I had mentioned how Mike Tomlin, the coach of the Pittsburgh Steelers, had a Steelers won a game, their 11th game in a row, but he just tore them a new one because they just made so many mistakes. And what happened after that ugly win? They lost to the Washington football team. You know, a team that's I don't even think was 500. And then they lost again just Sunday night to Buffalo Bills, a team that was, a good team. I think they were 9-3 at the time. So it just goes to show why if you win ugly, you just better regroup and make sure you don't do that again, because it can definitely lead to losses. And just so you know, these videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, have you won ugly lately?
Oh, yeah, I certainly have. I've definitely done that, And I think anybody who's a trader at some point in time does it. It's not a good thing to do because, exactly what you just brought up with what happened with Mike Tomlin's team is what can happen in trading. It's the type of thing where, you got yourself into a mess and, you should have gotten out, you shouldn't have gotten out, and next thing you know, you're in a big mess, so what do? You pull off a Hail Mary, and, sometimes you pull off that Hail Mary, and sometimes it works, and sometimes it don't. And when it doesn't work, now you're in mess times two, and you get yourself into bigger trouble. So it's just not a good thing. And other times, though, you go and send off that Hail Mary, and it gets you out of the trade. It may even put you into trade with a big win. You know what? I don't consider that a winning trade. You may have more money in the bank at the end of the day, but it's not a winning trade because you violated, or at least for me anyway, it would have violated my trading plan. And to win this game, I've got to go and, make sure that I'm not violating that trading plan, because that trading plan not only gets me through this trade, it gets me through this day, it gets me through this week, it gets me through this month, it gets me through my entire trading career. And the moment I start violating it, that's when I start getting into trouble. And, next thing you know, I got lucky. And the next time it comes around, it's like, okay, instead of getting out again, what do you do? Well, it worked for me last time. Let's try it again. And this time you get slammed, And that's where you get into trouble and why you shouldn't be trading that way. You got a trading plan for a reason. Following your trading plan will ultimately get you over the winning line, over the finish line. That's what you need to be doing.
Exactly. And
go ahead.
I was going to say, and this ties in with yesterday's topic that the market shouldn't do anything. I had alerted, traders that, hey, the market gapped up for the week and it should come down, but it's like, and as I said, that there are no shoulds in trading. And so I was looking for that short, and what did the market do? It turned around and it's launched from the 40s. How many times it launched from 33.40, and it's launched from 34.40 all the way up to 34.51, and now it's pulling back. It's just pulled out of the rat zone for the week.
Yeah, and that's what can happen. We don't know what the market's going to do. The market's going to do what the market's going to do. I guess you can go and sit there and analyze all the fundamental news that comes out, and you can analyze, all the different types of, statistics and all the different types of, technical indicators and all that stuff, and make a best guess as to what the market's going to do, but that's all it is the best guess. So that's why you have your trading plan. I keep on harping. I harp on the trading plan every single time I do a video because, prior to me being profitable, I didn't have a trading plan. The trading plan is what made me profitable. So yeah, I'm going to go and harp on that an awful lot because that's what keeps me out of trouble. It it limits my losses and it maximizes the number of times I win. And that's what has to happen.
Well,
and sort of like, go ahead.
I was going to say the thing is, it's the trading plan is your map, but you still have to execute. That's the main thing. You still have to execute.
That's exactly right. And when you're winning ugly, usually what happens is you violated your trading plan. You didn't execute what you've already pre-planned. Now I understand that you get into a trade and stuff happens. Things that you didn't anticipate, you didn't think was going to happen. It was outside the parameters. Sure, that's going to happen. But at the same time, there should be some mile markers inside your trading plan that go and say, this is a border that I do not cross. This is a line I don't go on the other side of. And to go and protect yourself and protect your account. And that's where your trading plan comes into play and basically will allow you to be a profitable trader.
Yeah. And so there's something I wanted to show the boys and girls and non-binary traders out there. You're looking at a monthly chart right here, and you see price broke across that monthly high. Then if you switch it down to a weekly, you can see the previous week high has not been breached yet. So that's just something to look at. Now we're in the rat zone, or actually the wick zone here for the previous week. And you see we crossed it at 3409, where the monthly break to the top horizontal line was at 3397. So it's just simple horizontal line trades, something that I talk about just about every video. These are the things that can be profitable, and we can even take this down to the day, and you can see here it barely broke through. We had a high of 517. Yesterday's high was 449. You still could have actually taken 5 or 6 pips. But the thing is, if you don't have that, mentality thinking, you know what, I'm up 5 or 6 pips. Okay, it's starting to come back. I better just exit this trade and take a couple pips. If you think, well, it should do this, well, it just might. And so, and you might find yourself down, like right now, you could be down 12 pips or something, and then maybe it comes back up. Well, if your stop loss should have been somewhere around 10, but you ignored it, you didn't place it, and then you win, that's an ugly win, because the next time it could come all the way down, and you're gonna regret it. So you have to make sure you don't have those ugly wins and thinking that, oh wow, I did good that trade.
Right. TRO, if you go over to a 5-minute chart, just show you an example of that. If you look at that, see that really big bar there on that 5-minute chart?
Right.
Well, if you look to the bar to the left of that, that's a red bar. And that would have been the first bar of that hour. Okay. And if you took a Walmal trade there, you could have been up 6-7 pips. Okay. And following my trading plan anywhere, 10-5-1, that means I get out at break even +1. But I did not go and move my stop loss to there. I could have, instead of being up that 1 pip or up 5 pips, depending on how you played that out, you could have been down 68 or 58 or 60 pips or more. And it just shows you how important going and not just having it and saying, this is what I'm going to do, but actually executing it. So instead of having a really good trade, if you would have gotten out and you would have taken 5 pips off the table there, and that was in your trading plan, that would have been a good win. But man, you could have got hit on really bad. Now, this price, it may very well come all the way back down. I don't know, an hour from now, 2 hours from now, 3 hours, I don't know. More than likely, it probably will, because that's a big return bar, and those return bars usually get filled. But how long do you have to wait and think about how much pressure you're under? Imagine you were going and trading, I don't know, 10 lots. You were trading heavy on that. You would have been down, $6,200, on that trade. Whereas you could have, if you traded 10 lots, you could have gotten out and potentially walked out with $500 in your pocket.
Exactly.
And that's why it's so important, you know. And the thing is, you know what? The next time, very well, you could have gone and said, you know what? I'm going to go and you know what? I should have gotten out, but I messed up, you know. And next time you go and say, you know what? I'm just going to stick it out and see what it does. And it could very easily on that big bar have turned around and then blasted all the way back through that 90 again and given you a win. But like I said, in my book, that's not a win. Yeah, you got more money in the bank, but it wasn't a win because you didn't do what you were supposed to do. Because, you know, we have this trading plan in place for one reason and one reason alone. It's what we talked about all last week. Preserve your capital. Because without capital, you're not a trader. And so that's what it all comes down to.
I know, and some people might think we're harping on things, but this is what's really important. I mean, I talked about indicators before and what indicators really do. I think I might have talked about it. I know I had that as a topic, but so many people are relying on the indicators and believing in the indicators when they really don't know the math or science behind the indicators. All they know is, well, it says if this line crosses this line, then I should go long, but because the indicator says. But the thing is, price, there are no shoulds, so price could keep going the way it quote unquote shouldn't, but your indicator says, well, go long as price is dropping like a rock.
Yeah, and it can very easily do that. If you look, we were talking about the monthly chart earlier. From 2 months ago, 3 months ago, we broke that high of that, and we were up, a ton from that price point. But if our trading plan says, you know what, I'm up this much, I get out, and I didn't get out, well, guess what? Now we'd be underwater by, close to 50 pips. So it's just, you got to go and trade what you're going to trade. And you got to go and lay it out and figure out what that is. You got to figure out what you're looking for, what you're targeting for profit. You got to figure out what you're targeting for loss and lay those parameters out there. Now, if you're a swing trader or something like that where you're trying to get the entire move, well, that's fine, but also understand that you got to have a bigger stop loss, which means you're going to have a smaller lot size. And that's okay. That's just another stop. I don't do that, but that doesn't make it wrong. It just means that that's not my trading style. And believe me, when I try to trade that way, because it's not my trading style, it's not in my trading plan, that's usually when I get slaughtered, or I may win from time to time, but that was a sloppy win because you know what? I took a win not because of anything that I've done. I took a win just because the market guards went and smiled on me that day, and I was able to go and and catch that. But the next time I could get hurt twice as bad. I don't want that. I've gotten it's sort of like you go through life and you have enough things that go against you. You have enough problems you have to go and deal with. Why am I adding things? Trading's hard enough. Why am I going to make it harder? Lay out the plan, follow the plan, and that's really what it comes down to. Make a plan and stick to it.
Yeah, because we're at the top of the hour here, and we just broke the 34.30 level, but that was the first touch. So you would wait that out.
Yeah, I'd wait that out. Now, do I miss trades because of that? Absolutely. I absolutely miss trades because of that. But at the same time, my trading plan says do it. And I think part of it is that by going and following that and making sure I do it, it makes me more disciplined. And what I have noticed is my trading anyway, when I'm more disciplined, I tend to be in the black more than in the red. So I need to go and follow my trading plan. Even if I miss trades, that's okay. Sometimes it is aggravating because I missed the first trade, okay, and then it returns all the way back down. I get the second break of it, and that one actually turns into a losing trade. Is that going to happen? Sure it is. But in one sense, that's actually a winning trade, even though you didn't get money in the bank. It's a winning trade because you followed your plan.
Yeah, and Walmal, the fastest 15 minutes in trading is up once again. So, fellow traders, just make sure when you win, analyze your wins and see if it's a real win or if it's a real lucky win. because you don't want to trade ugly, because it's not what you trade, it's how you trade it. So get out there and drain the banks. This is the Rumpled One, over and out.